South Korea's benchmark stock index, the KOSPI, has finally surpassed the 5,000-point mark, a milestone that once seemed out of reach but arrived much sooner than many had expected. For more on this, we're joined today by Dr. Soo Eric Kim, founder and CEO of Datacrunch Global and Adjunct Professor at Yonsei Graduate School of Business. Dr. Kim, thanks for joining us this morning.
Good morning.
So what do you think were the main drivers behind the Korean stock market rally?
So I think there's a couple of components that is driving the current rally. First, it's very monumental to see a 5,000 index in KOSPI, because that was one of the promises of President Lee during his election. And there's also a special committee on KOSPI 5,000. So I think it's very monumental that we have achieved the 5,000 index, which has been a dream for a long time. There are a couple of components. First, we are seeing a very, very strong tech sector. Samsung Electronics and SK hynix is the center of the global semiconductor manufacturing. And we can imagine from the AI boom and also the robotics boom and data center booms that Samsung Electronics and SK hynix is a very valuable investment. So they are leading the index to grow to 5,000. Other aspects is the high currency rate. Korean won greatly depreciated. So there's also a factor of inflated assets that we're observing. So there's two factors tangled together with each other, a real growth and also some kind of a inflation in the assets. The other factors is the movement of capital. A lot of money from the real estate has been moved to the stock market. So that's also an additional factor that is driving the 5,000 index.
Right, like you just mentioned, much of the market's rise has been led by the two largest companies by market cap, Samsung Electronics and SK hynix. How long do you see the semiconductor boom lasting, and what's your outlook for the industry for the rest of the year?
So I've been commenting publicly when it comes to a question of whether there's an AI bubble. I'm saying that we have to decouple the AI discussion with the semiconductor discussion, because we are seeing duplicated investment in data centers. And through CES 2026, I think everyone understood that physical AI is right around the corner. That all requires semiconductors, which are manufactured in two places in the world, Korea and Taiwan. So we're seeing a strong growth in the semiconductor sector, regardless of whether AI is in a bubble or not. And of course, even if the large language models AI is in a bubble, we are seeing that the physical AI sector is growing. So I think that this cycle will be extended for at least some time. And that's the optimism that global investors are looking into Samsung Electronics and SK hynix when it comes to investing for the future, outlooking that this technological trend will continue for some time in the future.
I see. And while the stock market continues to set new record highs every day, the Korean won is nearing its weakest level in more than a decade. The Korean government has pointed to continued overseas investment by Korean retail investors as a major factor. What are your thoughts on this, and are there any other factors we should be paying attention to?
So I think one of the fundamental reasons why the Korean won is greatly depreciated is, of course, what you have mentioned, the capital outflow from Korea to foreign investors, foreign locations, destinations for investment. So this is both the current companies investing in overseas and also foreign investors withdrawing from our capital markets. So these are two phenomena going simultaneously. So what we really have to work on is to make Korea a promising place to invest. We have to make our market more friendlier for foreign investments, and also encourage Korean companies to invest in Korea so that we can manage the weak won situation. If you look at the trade numbers, we're having a record high surplus in trade. So in that sense, the Korean won should be stronger from the trade side, but it's the capital side that is outflowing from Korea. So we have to pay a keen attention on the capital management of Korea and making Korea a attractive investment market.
Right, and even the IMF has warned that South Korea's ratio of dollar-denominated assets is exposed to outsized currency risks. What steps should the government take to sort of manage these risks and support the Korean won?
So IMF is saying that our dollar-denominated assets overseas that are exposed to risk is 20 times our trading volume, foreign currency trading volume in Korea when it comes to US dollar to won. That's higher than Japan. Japan is lower than 20 times. The highest ratio is Taiwan, which is about 45 times. So the current government has to pay close attention on the global currency markets so that we don't have that risk exposed. I think it was a good strategy that the Korean Pension Service did a hedging with the Korean bank to manage this risk exposure from the overseas. But we have to also pay attention to the private assets that are being exposed to the currency risk. So I think it's a good time for the Bank of Korea to pay a good attention to these situations. Of course, the government and Bank of Korea is working together very, very tightly to manage the depreciated won situation. But I think that we need to show a more bold strategies, even thinking about considering what we should do with our monetary policy and our interest rates. But that's a very difficult discussion because we have a very high debt rate right now, which makes it hard for our government to increase the interest rates. But a fiscal policy of having contraction of the fiscal policy might help managing the situation.
Right, I guess we'll have to see how that goes. All right, Dr. Kim, thank you so much for your time and insight this morning. We appreciate it.
Thank you very much.